I was down, but now I'm up. Yeah, this all God, this ain't no love. Yeah.
DXY, this is the index that most people use to track the US dollar. If we look at this, it kind of looks like we could have a head and shoulders playing out here that could plunge. If we invert the chart, it looks like you might even have a cup and handle playing out, which means it's also going to plunge. And the big thing here is what this means for the global economies. And by the way, I just want to show that it looks also bearish on the daily chart and also looks bearish also on the weekly chart. Okay, looks like this is going to plunge. This gives China a very key opportunity to pump some massive stimulus into their markets. And to understand why, we kind of have to do a history lesson, and we have to look to Japan. What did everyone learn from Japan during 1990, also known as the lost decade? Let's go ahead and read some of the summaries from the Federal Reserve. Hey, real quick, I don't know if you followed the inflation numbers, but there's a lot of deflation. You know what else is deflated? My ego. So I need some stimulus in the form of likes and subscriptions. It'd help a bunch. Thanks. After 1990, Japan's economy slowed sharply following decades of strong performance. In response, the Japanese government undertook substantial fiscal stimulus. The evidence suggests that Japan's fiscal policy did provide some short-term macroeconomic support, and in the absence of that stimulus, Japan likely would have experienced an even deeper economic downturn. Now, for reference, we can also look at the Japanese market. We can see in 1990, we hit this incredible high that actually took multiple decades to reclaim, okay? And Japan didn't actually put out any stimulus all the way until 1992, okay? That's when their stimulus actually came out, and we can see that it actually did very little to actually improve the economy, and by 2004, you were still hitting more lows. This is the lost decade of Japan, where they just couldn't get it up. So what did the Fed try and learn from this? Nevertheless, since its initial slowdown, the Japanese economy neither recovered its earlier pace of growth nor achieved sustained positive inflation. Some of the failure can be attributed to factors beyond the immediate control of the authorities, including fallout from the previous bubble economy, the Asian financial crisis, and population dynamics leading to a slowing of potential output growth. In addition, there were problems with the mix and implementation of the fiscal policies, including the failure to maintain fiscal stimulus on a sustained basis. Finally, and more fundamental to Japan's lost decade, was the country's inability to quickly address weakness in the corporate and banking sectors. Without a pickup in the private sector, fiscal policy was essentially a bridge to nowhere. And that's that sustained period of it just didn't work, right? We saw new lows within 14 years. This note provides an overview of Japanese fiscal effort during the past 1.5 decades, briefly analyzes its effectiveness, and discusses key lessons for the United States. Now, surprisingly, these lessons are that in the face of deep economic disruption, fiscal stimulus is likely to be more effective if it is large and sustained, coordinated with significant monetary policy action, and implemented in tandem with policies to address underlying structural weakness in the economy. Okay? So basically what they're saying is that Japan would have probably recovered better if they didn't do multiple stimulus packages that were stagnated and didn't focus so much on the infrastructure, but rather more on the banking sector, and we're more aware of the forex markets. So that's what China right now is probably thinking as they're watching their market enter into what could be a lost decade. When we look at FXI, we had this high peak, and now we're just in this prolonged period where this looks like it could march lower, okay? But everyone's learned from what happened with Japan. And so what I think is occurring and what could occur is like, hey, we're seeing that the US dollar is getting weaker. What this does is it creates a window for China to pump out the stimulus and not cause massive disruptions within their currency where it's going to weaken too much, and also cause some outflows of money out of the country like Japan received, where they couldn't recoup that money, they couldn't get to come back. there's this window of opportunity where China could really pump out some stimulus. And in the bounces that we're seeing, which I think is better recognized if we look at something like Baba, where this thing has been catching some bids, and once again it's catching some more bids. People are kind of pouring onto this. On the daily chart, it's actually looking really strong, okay? Stronger than the previous rally that we saw early in July when we first started the dollar starting to turn over. Stronger than that, okay? And we actually just had a surprise to the upside for Baba as well. This looks really strong. To me, this looks like a great long position to take, as we're seeing that the daily chart is starting to improve. And as the weekly chart on the TTM, interestingly enough, looks like it's about to fire back to the upside. Only just a weak touch to downside, and now it looks like it's pumping again. I think the market is starting to catch on to the fact that China has a window of opportunity where they can learn from what happened with Japan and do prolonged stimulus to pump some money back into the economy. And even if it isn't as effective as Japan, or they screw it up, we can also look to Japan, the performance of Japanese markets, and say, hey, in 1992, when they did do their first stimulus package, it did catch a nice thing. That's a 4,000 move on the Nikkei, okay? So that is bullish. And I think there's a window of opportunity here where we can buy some Chinese stocks. I don't see it as an investment opportunity because holy cow, there's a bunch of risk in that. But there is a way that we can catch the wave. And keep in mind, we've seen also in recent years that when China does pump out some stimulus, think about the early 2020s. I mean, technically we're still in the early 2020s. The earlier 2020s, we saw that also had some ripple effects in the US markets. So that's something to also keep in mind as we head into the end of the year. Economic data for this week is going to be pretty light. We're going to hear from Powell on Friday. We're going to get some initial jobless claims on Thursday morning. Careful trading into that. And we also have our Fed minutes on Wednesday afternoon. No, not big expectations for that, to be honest. For earnings reports, earnings are going to be really interesting. We have a lot of retail names. Okay, Target's going to be interesting. We saw a big rally out of Walmart. We also got, of course, the strong retail numbers last week, so some of these names could surprise to the upside. We have Paliato, PNW. I have no clue if I said that company's name right. I don't know if it's supposed to sound as Spanish as I just said it, but that's going to probably also give us a hint of CrowdStrike as well. This company's had a good recovery after two reports ago. We saw a lot of weakness and a big plunge in the name. It looks like they want to try and recover to new highs, especially since the market's starting to improve. We'll see how that plays out. Canva is one of my holdings that I love, and I'm expecting them to outperform the rest of the market as they have been. My favorite setup this week is Tesla. This is a very important trend line right now for this stock, and if we can get a solid break above it, we can get out of this bearish consolidation. Now, it's important to note that my charting here is broken, and I'm waiting to redo it once I see if we get this breakout, because we did have a wave 4 retrace into wave 1 when the market mechanically collapsed because of the Japanese carry trade blowing up, and now I'm looking to say, okay, I might be able to get bullish here again. And I've done really good because this is my number one position as I, broke down that full Tesla analysis. What was that? Maybe I could just look at this chart because I did that when I was at 180, right? So that was a full month ago at this point where I loaded up Tesla hand and fist. I never sold. And I played puts all the way down, protected my position. I think at one point I even sold some calls against it, collected some premiums, and I've taken no losses on the way down here, next to none. Pretty much protect that position very well. In fact, I actually gave some money back trying to continue to keep some puts on during this phase of the stock. So anyways, short term, above this trend line, I get really bullish on Tesla. I love the setup here. The only thing I want to kind of finish up with the report is Bitcoin, massive cup and handle here. All right, and Google, back-tested performance of cup and handles. It's 95% probability. Okay, so right now into this chop, I'm fine holding it, and there are even some names related to Bitcoin that I've bought some long-dated calls on that feel really solid holding them, especially with the political pressure in favor of Bitcoin, which is something that we haven't seen for years. So I'm very happy with that. I guess I'll add one more thing to this weekly report because it's going to be a shorter one. I'm looking for this to be completion of a third wave 1, 2, 3. That we talked about this in the past, right? We wanted to see if we were going to get the bullishness. We got the bullishness. Last week was a great week for trading, as opposed to the 2 weeks before that, where it was very rough, trying to play into this chop and just being patient, sitting on the hands. We were finally able, especially like near the end of last week, to get really active. And right now, I am looking for a bit of a pullback, especially in names like NVIDIA. Be mindful, NVIDIA earnings is later this month. And the entire earnings season, it's like people have forgotten somehow. The entire earnings season for any of the AI-related names has been to sell off after earnings. Will NVIDIA be different? Yet to be determined. Keep that in mind, though. That's going to be it for this weekly report, though. I hope you enjoyed, and good luck on your trading. And of course, as always, God bless.